Good morning to the Bookmap community. Welcome to the live stream. My name is Charles. I come from a community called Piratetraders where we are focused on the ES, the NQ, and how they move through the two-way auction process. I am not seeing myself up on screen yet. There we go. It's happening. I'm here. You're here. Only got 28 people hanging out so far on the YouTube. So if you could smash that thumbs up, give me that little like first thing in the morning, that should tell the algorithm to send some more people my way. And my way they should come, because excellent information I have to share today to carry forward for the days ahead in the market. Before I get to that, real quick, just a couple of announcements I wanted to make on behalf of Bookmap. First and foremost, this week they are going to be doing a series of live streams in the Discord. You have to be inside the Discord to see them, but it is a funded trader webinar series. You guys know I hate these funded trading accounts. I'm not a big fan of the quote unquote prop firms of the modern era, where you pay money to compete to try to get an account and so on and so forth. But they're doing it in the Discord this week. They're going to teach you how to win those funded accounts. So if it's something that you're interested in, you can head to the Bookmap Discord and you can watch those there. And then also, I wanted to mention the winners of the Blue Jacket competition this month will also be getting some one-on-one coaching with Tom B. So if you are not familiar with what the Blue Jacket Club is, basically, if you sign up for the education through Bookmap, you can, the Bookmap Academy it's called, you can enter into this competition, which is called the Blue Jackets competition. You basically just post screen grabs of your charts explaining setups that you see throughout the day. And then other people will go in and they will comment on your charts and give you their opinions. And it's basically a way for traders to help each other grow and improve. You show what you're seeing and how you're trading it. Other people give you their insights. They share what they see and how they're trading, and you give them yours, and everyone grows. So if you are interested in that, like I said, this month, one-on-one coaching is a prize with Tom B. So something you might consider. All right, well, let's dive into the charts to figure out what's happening with the market. So again, I am focused on the ES and the NQ. I am focused on the indexes and what they're doing, not as much individual stocks. So that is what I'm going to be talking about here today. All right, well, we had an event that happened last week. That event was the election, okay? The market had been consolidating for several months, going sideways, basically waiting for that event to happen, waiting for that information to come out. Trump won. The market made a massive move. It made a huge gap to the upside. It broke out of that balance area. Let me actually zoom in here a little bit to make it easier to see for the people in the cheap seats. This was that multi-month balance where the market was trying to decide what was going to happen. This was that massive gap up, which got us to that upper end of balance, right? So this area is very important to us. We stay very focused on the upper end of a balance area, because this is essentially as far as the market has been able to go and continue to bring in new buyers, right? Every time it came up here and it tried to bring in new buyers, it failed. Couldn't bring in the new buyers, came back down. Couldn't bring in the new buyers, came back down. Couldn't bring in the new buyers, came back down. Okay, so the market failed to bring in new buyers around here over and over again. We'll call that somewhere around the 5,900 level. Okay, but that momentum from the gap up and from the election got us up there. We were able to bring in new buyers multiple days in a row and create some momentum to the upside. However, all of us in this space, all the members of the Piratetraders Brigade who trade with me on a daily basis, we were well aware that that wasn't real bullishness, right? That the market, it didn't really just suddenly get bullish because Trump won. That was actually just the market balancing off all of the hedging that had been created because of the event, right? People are worried. It doesn't matter who wins or loses. Big event comes along. The market could crash as a result. So they buy hedges, they buy puts as a way to protect themselves from that crash happening. Market makers sell the indexes or sell the stocks that they are selling the puts in as a hedge themselves on their positions. So once the news is over and the market starts to make its move up, anyone who's buying puts closes those out. And any market makers that were short stocks as a way to hedge against a drawdown, they exit. And so boop, boop, the market gets momentum to the upside. But it wasn't real momentum. It was just the unwinding of that event volatility index sort of thing that had happened there. Okay. So what are we waiting for? Now that we got that initial move, we're waiting to find out, did we really change hearts and minds? Did we really convince the world that they should buy stocks right now because the market is going to keep going up and be worth more money in the years ahead? Did we really convince them? Where will we find out whether or not we really convinced them? At that previous balance area high, right? At this area, right about where we are opening today, this is the area where if the market really is bullish, and it's going to go make new all-time highs, and we're going to have a crazy year ahead of us of momentum to the upside. If that is going to happen, this is where those buyers should be stepping in. Right around Friday's lows, right around where we're opening right now. This is where those buyers, those bigger hands, deeper pockets buyers should be looking. They're not going to be chasing price last week, but they should be looking to buy. This is the first dip where they could be looking to buy. If they are not, if they don't buy the dip, the market is sending us a message. It is saying it is not actually bullish. It needs to spend more time balancing. All right. So if we cannot get a bounce today and start to create some momentum to the upside, I believe in the week ahead this week, we will get a larger pullback in price, probably down to at least somewhere around 5,800. If not even as far as 5,700. Okay. Because if the market can't bounce here, it's going to need to go on sale. It's going to need to go on discount to bring in those shoppers, those people that will only buy when it's on sale. Okay. So now let's zoom in. That's our bigger picture understanding of what's happening, right? Either we are going to flip in reverse and start heading back up this week, in which case it is new all-time highs, baby. It is bullish as can be. Or we're going to fail and we're going to start to pull back down. What would those look like intraday today? How would we see those happening? Well, first and foremost, we are back inside the gap up that was created by the election. Okay. So that alone is a little bit bearish to see because it is a sign that we don't quite have so much momentum. So if the market is going to go higher or lower today, the long and the short of it is it wants to get out of this gap if it's going to go higher, and it wants to stay in this gap if it's going to go lower. Okay. So we can look at the low at 5,900, exactly at 5,900. We can look at that low as sort of our bullish bearish level for the day. The more time and the more volume that the market brings in above that level, the more likely it's going to try to bounce today and move back up towards Friday's highs. The more time we spend below that level and the more volume we bring in below that level, the less likely that bounce is coming. The more likely the market needs a pullback with price. Okay? So when the opening bell rings, we will treat the overnight range, which is the range the market traded over the weekend. That is between 59.17 and 58.87. Okay. We will treat that as a chop zone. We will not know if the market is going to go up or down or sideways. We will just assume it's going to chop. And we won't try to make guesses as to what it's going to do while it's inside of there. If it gets above that overnight high, if it gets above 17, starts to find buyers, well, then we're looking to head higher. The first move is to backfill the single prints to 59.24. If we get more buying there to test yesterday's high, Friday's high at 59.41, if we are able to get new buying up there, So if the market gets all the way up to Friday's high, it gets above 42, it gets new buying up there, that is extremely bullish. And we should pretty much be looking to head back to all-time highs if that is what happens. Okay? So getting above Friday's high this morning, get above overnight high, find support, get above Friday's high, find support. Doing that tells us we're getting that bounce off of that previous bounce area, which means we're probably heading all the way up to all-time highs. Now, that'll mean today, but just in the week ahead, we are probably heading up to all-time highs. So getting above Friday's high and getting new buying is just very, very bullish. First to fill the gap we left behind on Friday, then to monitor for continuation higher from there. If we get a failure at either one of those levels, so if the market gets to the overnight high, can't bring in the buyers, pulls back down, or gets to the previous day's high, can't bring in the buyers and pulls back down, then we're going sideways. Okay? And then to the downside this morning, if the market opens and it's able to get below the overnight low and it gets new selling there, that is very, very bearish to see. In the same way it is bullish to see buying above, because that is telling us we are not getting those discount shoppers buying that bounce off of 5,900. And so the market needs that larger pullback in price. So the first target to the downside is a repair of the week reference at 58.79, which is basically yesterday's low, Friday's low. Okay, so once we get new selling below the overnight low, we're looking for a move to 79, and then we monitor for continuation lower from there. Do we get new selling below yesterday's low? So same thing as I said with yesterday's high. If it looks above and it fails, it means we're going sideways. If we look below Friday's low and come back up, it means we're going sideways. If we get new selling, it means we're going lower. And I do mean lower, because then we are back inside this gap. And a move from Friday's low to 58.14 would be very, very easy for the market to do. Okay? Anyone who bought after the election results, if the market starts to trade today and it gets back inside that gap, they are all fixing to get squeezed. And that market can make a move very quick to the downside. So, as is often the case on a Monday morning, I encourage caution and patience and wait. Just freaking wait, because there is big opportunities. In the week ahead, either this market is making a move back down towards previous lows or it's making a move back up to all-time highs. One of those two things is happening. You don't have to be in a trade to make money first thing in the morning on Monday morning. You can wait for a little bit. Wait for more information. Wait to understand what's going on, and then there will be lots of money to be made catching the moves once you have confirmation, once you know what the market is doing. So I would encourage caution this morning and waiting for more information. The overnight high and the overnight low, those are the important levels. If we get there and fail, more sideways. If we get there and get success, momentum in that direction. Okay, it really is that simple. Simple to understand. Today is a day where the market is making it very easy to know what to do. The doing of it is what will be the hard part. The not taking trades in bad positions, the not guessing ahead of information, that will be the hard part. But if you have the patience to wait until the market clearly tells you what it's doing today, there's a lot of money to be made, I think. Okay. Let's take a quick look at the NQ. I have a feeling it's in a very similar position to the ES, but we'll jump in here and we'll take a look anyway. Yeah, so the NQ is actually more bearish than the ES because we spent the entire second half of the day on Friday and the entire overnight inside that previous balance area. So whereas on the ES, we're right at the balance area high right now, trying to decide if we're going to get back in balance, the NQ has already decided that it's inside of balance. And when we look at those highs on the overnight range, that's pretty bearish to me. That's a 45-degree angle, which means strong resistance. And it is the market trying very, very hard to prevent the market from going higher. trying to keep us inside that previous balance area. So that to me increases the odds that the NQ needs a pullback. So whilst I would describe myself as completely neutral on the ES, I would describe myself as more bearish on the NQ. I would treat it the same way. Chop zone inside the overnight range. If you wanted a tighter chop zone, I would say this node right here that ends at about 25.45. That could be your chop zone low, meaning if you get below there and you get new selling, you could short from there to the overnight low. But that would be if you really felt you had to get in a trade. Otherwise, I would use the overnight range as my chop zone and just wait. Because again, if they get above that overnight high and they get new buying, this thing could make a very big move to the upside very quick. And there's lots of money to be made once you get above that high and get confirmation. Whereas if you're trying to gamble in here, the higher probability in my mind is actually that they're going to head lower today towards that previous balance area low at 2330. 20,330. Any questions from the chat? Any comments? Any concerns? Any criticisms? Hello? Hello? Are you guys there? We got Michael in the house. Good morning to you. Welcome. Will is here. Laura is with us. Kevin in the house. Trevor is here. Scalp Demon is hanging out. Griff says, I know you talked about the breakout of the balance being due to the closing of hedges. What did you think about the balance at the highs after the election? Well, yeah. So NQ and ES slightly different here. NQ really just balanced, but ES was trying to create momentum and then that momentum failed. So these 2 days right here were really the only balance at the high. This was still trying to take the market higher. This was 2 days of uncertainty, but these lower lows, that's where things got bearish, right? The market, lower highs, lower lows, value lower. So the market started one time framing lower on the daily, or continued, you would say, one time framing lower on the daily. And also that spike down at the end of the day. This is where you know momentum is shifted. We're not just balancing up at the highs anymore, because if we were, when the market dipped down here, we should have turned around and shot back up, but it didn't. We dipped down and stayed down. So yeah, this was balance. What did I think of it? I was 50-50. I didn't know if it's going to keep going or not, right? I can never make predictions about what the market will do in the future. That's not my business. I know some people, that's how they trade. They make predictions about the future and then they make bets based on those predictions. I make predictions based on what's happening right now at this moment, what is going to happen next, right? So on a day like these 2 days where the market is just balancing at a new all-time high, all I'm saying is it could go higher, it could go lower. Let me wait for more information. And of course, as I said, that more information was the spike down the next day. That's how I carry it forward. And by the way, we're in exactly the same place at the open this morning, where a move above the overnight high could lead to a big move up. A move below the overnight low could lead to a big move lower, but they both could also lead to another sideways day down here, right on that previous balance area high. So we just wait and see. We take it one tick at a time. We see what is the market giving us right now? What is the most likely thing to happen next? And then what happens next? If the most likely thing to happen happens, then we assume it's going to keep going. If not, we assume the opposite. DNK in the house says, can we look at NQ? We did. Ross is here. Can we look at YM? I don't have that on my market profile, but I can pull it up. Whoops. I can pull it up on my regular chart. Yeah, I mean, it's exactly the same as the ES. Identical. Market was in balance. Election. Gap up. Now we are back to retest that previous balance area high. So I would say you could look at the Dow Jones exactly the same as the ES. Today is that big moment of truth. Is this a breakout back test looking for continuation to new all-time highs? Or is this a breakout back test failure looking for a move back down towards the lows? Today will tell the tale. Unless today is just a balancing day, in which case tomorrow will tell the tale. We got to take it one tick at a time. Will Black Swan says, good morning. Good morning to you. Jonas is here. Good morning. Ships in the house. Hola. David is here. He says I'm early today. No, I'm always 9 a.m. on Mondays. Monday, I get on early. Billy K is here. Good morning to you. Alyssa in the house. Griff is here. I got some good news for you guys today, too. I worked it out with the fine people at Bookmap, and they're willing to let us stay here on the YouTube and stream the full hour here without switching to the Discord 3 times a month. So 3 days a month, we're going to do the full stream here on YouTube. 1 day a month, we're going to do the full stream on Discord. But we're going to make it interesting. We're going to come up with something a little more fun to do on that 1 day where we're in the Discord. I'm excited to talk about it. I'm not going to talk about it right now, but I will chat about it, later on today with the members of the brigade, because I think they're going to help me out with this. So something exciting coming in the future. But I can't say anything else now. That's it. Arjit in the house, good morning to you. Any other questions? Carlos says, when is the contract rollover? Man, I don't think I've ever been asked that. It's not anytime soon. So the next roll is the 16th of December. December 16th. A month from now. Willie T in the house. Good morning to you. All right, we got 5 minutes until the market opens. Do you have any questions for me? Any questions for the pirate? As far as Bookmap, so far this morning, this has kind of a mechanical body feel to me. So that increases the odds of chop right at the market open. So I encourage everyone to be patient with their entries this morning. I feel like they want to bounce us around for a bit before they give us a direction. Unless you like scalping, quick little moves, in which case it's time to party. About to be lots of little reversals in a very tight range. David says, does the red line in Bookmap mean resistance? That is a great question. The answer is yes and no. So what the red line that you're seeing above price is that is orders sitting in the order book. So those are shorts just waiting to get filled up there. But they will only be resistance if they're real orders that are actually going to get filled. My guess is they're not. Why do I say that? Because look at these orders that were up here. Let me change colors. If you see these orders right here, that was orders to get filled right up until the second the price actually got to them. Right here. In which case, what happened? Boop, boop. They all just disappeared. They were like, fuck that. We don't really want these to go short. We just wanted to make you think they were going to. So they spoofed them. They pulled them at the last minute. And then, of course, as soon as the market realized there's no real liquidity there, what did it do? Turned around and started going back down again. So, could those act as resistance? Yes, but it all depends. I would say once the opening bell rings, we're still a couple minutes away and everything changes the moment that opening bell rings. This resets itself. But if that's still sitting there, those orders up there at 59.06, my assumption would be they will hold as resistance and smack the market down. But if we start to get up close to them and they disappear like this, we will pass right through. We will just boom, shoot right through it and keep going higher. So let's wait and see. Let's see what happens. Mike says, do the Bookmap have an automatic rollover? That's a great question. Yeah, it depends on your data provider, right? Your data provider is the one that gives you the contract. So yeah, pretty much most data providers should have a continuous contract that allow you to have it automatically roll over. But if not, you just have to change one letter. It's not that big of a deal. Just change one little letter and then you're on the new contract. I think contract rollovers, for what it's worth, guys, is something people spend too much time worrying about. It's really not a big deal. You get an entire week to roll over. You can roll over any day of the week. And it doesn't really have any big effect on the market. So we'll figure it out next month. One minute to market open. Nothing else from the chat? All right. Well, if you've got nothing to say, at least say you like me by smashing the thumbs up button. Let me get some thumbs ups. Got 32 out of 100 right now. That's not very good. All right. Market is open. We are in a chop zone where my assumption is the market is going to chop and grind and go sideways and fake us out a bunch of times before it picks a direction. It's a chop zone. All right, so the first thing I'm doing is I'm coming over here to look at the regular ES chart on Bookmap because I want to see what the icebergs are doing, right? Are there any icebergs in the market? If they are they going long? Are they going short? Or are they on both sides? And are there any large stops that are getting taken out? So first thing I see here is we had a green iceberg that flipped and instantly became a red iceberg. We took out 28 stops. That's just one, person got stopped out for 28 contracts. So that tells me the market is likely to keep pushing lower for the next few minutes to try to take out some more stops. But once it takes out whatever stops it's going to take out, it'll be coming right back up. So this to me looks like chop. Currently, the high of the day, the A period high at 59.01, is what we call a weak reference. We consider it weak because it reversed right at the opening price, just a point above the opening price. And so that tells us that there are likely still buyers that didn't get a chance to get long, and there are likely shorts that have their stops right above that high. So that slightly increases the odds that at some point today we're going to come back for the high. Again, confirming a choppy morning. Nando says, how about the QQQ? Well, the QQQ is the Q. So let's take a look. Yep. Like I said, we are inside that overnight range. I am more bearish on the Q, but I believe both markets need to chop for a while this morning before they pick their direction. The Q also has a weak high. So they're going down right now to try to take out any longs from the overnight, but then they're likely to turn right back around again and take out any shorts from this morning. Also, if you are watching this in the Discord, you are more than welcome to leave a comment in the Futures Charles tab of the Discord. Where's Discord? There it is. So if you are one of the, there's only like 10 people watching. Hey guys, if any of you want to leave any comments, just scroll up here and click on Futures Charles and you can leave comments there and I will respond. So far, I've got one thumbs up from MRB. Appreciate you showing the love in the Discord chat. Okay, so as the markets come back up for those weak highs, remember that passing back through the opening price, which we are doing right now, will squeeze anyone that's been selling thus far, right? They've all been short with their stop above the high of the day. They're all fixing to get squeezed. But we are still inside a chop zone, right? This isn't bullish yet. It's just a move up. So now I'm asking myself, where is the resistance? Where can the market get smacked back down if the chop is going to continue? The first level of interest for me is this little tiny node of volume from Friday, right here at 59.07. Then we got the half back from Friday, which you can see is also in an area with taper of time from the overnight. And then this node right here in the overnight around 59.13. Those are my resistance levels. Let's see where we find sellers. Archid says, ticklish, please. Ticks not really showing us anything yet. I think we're just still stuck in this chop zone. So I'm going to let price do its thing for a little bit here. I'm really quite interested in the icebergs. Where are they doing things this morning? What are they trying to convince traders of first thing in the morning? Because often the market will do the opposite the rest of the day. So if it can convince everyone it's going to crash this morning, then it can turn around and head up for a few hours. So I'm just watching the chop, and we will share what we see as we see it. Sook in the house, good morning to you. Welcome. It's so choppy, very choppy. They're getting them short at the open. So you see what they're doing now. They're trying to convince everybody to short right here. Right at the opening price. But where are those sellers putting their stops? Just above 59.02. So even though the market might get a little push lower, they're just creating more and more weakness above. Fixing to get squeezed. Good morning, Stephen. Welcome. We got 128 people hanging out. Welcome one, welcome all. If you don't know what you're looking at, let me tell you. The screen on the left is a market profile chart, which is showing you the ES and how it's moving through the auction process. By looking at it on TPO charts, we can see where the market spends the most time. That's the areas with the most letters in it. And where the market brings in the most volume. That's the area with the largest, volume nodes, biggest in size and darkest in color. And we can basically use this tool to monitor changes in the market. Is the market spending more time or bringing in more volume in a new area? That tells us something new is happening. Or are we just continuing to spend time and bring in volume in a previous area, like we are this morning so far, right? Where has all the time and all the volume been brought in this morning? Between the large node from Friday and the large node from the overnight. We're just still balancing, right? But when we break out of here, when we get away from these areas, then we'll know something bigger is happening. So that's what we use the market profile to understand the context of where the market is in terms of price and where it is likely to go next based on time and volume. On the right side of the screen, we have the Bookmap chart. The Bookmap chart is showing me where the current liquidity is in the order books and how that changes over time. When I'm looking at the Trader Map Lite chart, which you're seeing right now, that clearly shows us how that changes. So for example, the market is heading down. As the market is slowly grinding its way lower, they're building more and more liquidity above. So they're trying to say to market, hey, come up here. Come tag this liquidity. You know you want to. But instead, the market dropped. They squeezed a bunch of stops. They started pushing lower. So what happened to that volume? It disappeared. Well, as soon as it disappeared, what did price do? It started coming back up. And so then they put the magnet back. Come on. Come. And now as we're selling off again, what's happening? Disappearing again. Okay. So I can see that they're using the liquidity in the order books to try to pull price or push it away. I can see on the icebergs and stop setting that it's artificial, right? They push it down. They create support. They hold it in place. They break it. They push it up. They hold it in place. They break it. And now we're pushing it down. So I can see that this is just shenanigans. It's just computers. This is not real traders. Oh my God, I'm bullish. Oh, I'm bearish. Oh, it's going up. Oh, it's going down. It's just computers trying to make a quick buck this morning, chopping the market around, convincing you it's doing one thing and then doing the other. Will says, should an iceberg below to purchase the future be considered bullish or bearish? I know the price moves down to it, but it is buyers. So that there is no simple answer for that. Generally speaking, if you see an iceberg above or below price, you should assume the market will get to it, will test it. So, for example, there is currently a sell iceberg at 97. You should assume the market will get up to 97 to get to that sell iceberg. There's also a long iceberg at 92. You should assume it'll get down to 92 to that iceberg. What you cannot assume is what will happen once it gets there. It's impossible. It's random. Don't waste your time trying to predict ahead of time what will happen. Maybe the market will get to either one of those and reverse, right? That'll be a big order and it'll reverse the market. Maybe it'll get there and it'll blow right through and it won't matter at all. It's really hard to know. So for example, this was a green one. We came down into it. We got a little bounce, but nothing. This was a red one. We came back up into it and got a massive sell-off. So all you know when you see icebergs is that the market is likely to test those levels again. You don't know what will happen once it gets there. So obviously, when I see an iceberg that is green and red, see, look, we got to the red one and it disappeared. The second we got there, it was a fake out. They just pulled it. So now it's probably going to turn around and head down to the green one. And then they disappeared the green one. Oh no. Right. That's the way it works. So while the information is there, you use it. Once it changes, you change your opinion with the changing information. Because of that, icebergs alone are not good signals because they just change in a fraction of a second constantly. So they're just one piece of data to take into account. In the same way with the liquidity. The liquidity is constantly changing, arriving and disappearing and arriving and disappearing. And it absolutely pushes and pulls on price as a result. But you can never really predict what will happen once it gets to that liquidity. You just have to wait and see. Speaking of which, all of this reads like chop suey to me. Chop suey. A little bearish, but still in a chop zone. Okay, if anybody sees this big red dot that just popped up right here, that's a volume dot. That is showing we just took out some stops at the low. Sometimes that's all the market needs to bounce, is just to boop, poke down there and take out those stops, and then we can start to move up. But again, not always, just something to see. All right, liquidity at the low, going dark, increasing the odds we're going to turn around and head back up. Anybody got any exciting news happening at 10 a.m. for us? This just has that teetering right on an edge before a flip exactly at 10 a.m. kind of vibe to it. We got some numbers coming out I should know about. David says, what is your opinion of the most respected profile, TPO or volume? So that's a great question. I think they're just both equally necessary. I don't think one is more important than the other. Where does the market spend the most time, or where does it bring in the most volume? It's two pieces of data. Why would you want to limit yourself to only one? Know where both are happening. So think about it like an auction. Okay. Think about it like an art auction, right? An auctioneer, they start the bidding. There's lots of people bidding, right? There's 10, 15 hands that go up in the air at the beginning. And then he lifts the bid a little bit. Starting with 1,000, and 10 hands go up. He goes 1,100. I have 1,100. 8 hands goes up. 1,200. Do I have 1,200? 7 hands go up, right? So slowly but surely, as he lifts the bid, as he takes price higher and higher, there are fewer and fewer hands that will go up. The volume will get thinner the higher the price goes, right? So you want to understand volume so you can understand where you are in that auction process. Is price about to stop going up because there's fewer people willing to pay it, right? The other thing that auctioneer will do is tempo. He will use time. So in the beginning, he'll be lifting that tempo very fast. I have 1,100. Do I have 12? 12. Do I have 13? Do I have 13? Do I have 14? 14. Do I hear 15? 1,500. 1,500. 1,500. We have 15 over here. Do I have 16? 16? 1,600. Do I have 16 from this gentleman? 1,700. 1,700 going once. Anyone. 1,700. So in the beginning, lots of volume, very fast tempo. Towards the end of that auction, slower tempo, right? Things get much, much slower and thinner volume. The volume is less and less. So if you can learn to recognize that process happening on stocks, both an auction up and an auction down, you can recognize where those changes are taking place. Where is this market? Maybe it's going up right now. Where is it going to stop going up and turn around and start going down? What are the signs I need to look for? Well, I need to be able to see where it's spending time in order to be able to recognize changes in tempo. And I need to be able to recognize where it's bringing in the most volume in order to know where that volume is getting thinner and thinner. So if we, for example, right now, look at yesterday's range. Okay, I'll just redraw this chop zone in a second. So if we look at yesterday's range, look at how much time we spent up here. Almost none whatsoever, right? 1 letter going across up here. A little bit more here, 2 letters going across. A little bit more, 3 and 4 letters going across down here. What about volume, right? Very thin volume up here. Not a lot of volume. Very thin, right? Look at that. Little more volume, right? Well, then what happened in the overnight? This is information the market gave us on Friday. What did the market do in the overnight? It stopped going up right exactly where it stopped going up on Friday, right? It ran out of volume. The bidding stopped in the same place that it did on Friday. Let's look at the low. Same story there. Right where the volume and time started to taper off is right where the market reversed at the low. Okay. So if I can't see both of those pieces of information, if I can't see the time and the volume, it's much harder to figure out where those reversals are going to take place. So one is not better than the other. You need them both. That's my humble opinion. Okay, so as we print the B period here, we recognize that we are still in a chop zone. We have a very, very weak high. Okay, this high is very, very weak right now. because multiple times we came up here and they artificially reversed it right there. So that tells us there's a lot of stops up here. We can use that information in two ways as a carry forward. Right now, at this moment, it's telling us the market is likely to come back up and take out these highs at 5,900 and continue higher, right? Because that's where the liquidity is waiting. But if the market were to keep selling off here and it were to get down to that overnight low, and then we were to start to see new selling below that overnight low, then that information changes. And this week high is no longer a target to the upside. It becomes a when what should happens that tells us sellers are in charge. Remember, how did I start the day today? I said 5,900 is the level. This is the level. So the more time and the more volume today the market brings in above 5,900, the more likely we're going to get a move higher this week. The more time and the more volume that we bring in below that level, the more likely we're getting a pullback this week. So far today, we have spent all our time and all our volume below that level, back inside the gap from the election. That is bearish to see. So it is either one of two things. It is actually bearish, in which case we want to see it as bearish once we get below the overnight low, or this is a giant fake out and they are just getting everyone they possibly can short right now so that they can wipe them all out and start the momentum up later on. So I still see it as a chop zone. I am slightly more bearish now than I was at the open, but only slightly. And I will need to see what happens at the overnight high or the overnight low to be sure of any real momentum one way or another. It is a chop zone. They are chopping it up. Happy trading. Have a wonderful day, everyone. If you liked anything you saw today and you're interested in learning more, I highly recommend that you sign up for the Piratetraders Brigade. You can see there's a link up in the corner of the video, piratetraders.io/join. It only costs $10 and you get my live streams every single morning, giving you my insights for what I think is going to happen throughout the day. I guarantee you, if I'm giving you insights every single day for a month, I can give you insights to help you make a single tick on the ES. One tick on the ES of profit is $15. You've already paid for your fee and your membership for the month. And I'm pretty confident I can give you a trade at some point for a single tick of profit. Call me crazy. So thank you so much for joining. If you are a member of the brigade, head on over to that private stream. We will see you there. And if you're not, we'll see you here next week. Thanks a lot, everyone. Looks like we're taking out that weak high, which means the chop will continue. 'Cause it's a chop.